Why Cardano can see an accumulation phase in the next few weeks. How did some investors manage to double their Cardano? Is Cardano under attack? If you want to learn all about it, then stay tuned till the end to find out more. Welcome to Cardano Rumors, the best place for your daily dose of Cardano. Before we proceed, I want you to hit the subscribe button and smash the notification bell for more interesting updates about Cardano. And if you have any question, be sure to leave it in the comment section. Also, you stand a chance to win a brand new MacBook Pro. Here's what you need to do. It's very simple and easy. ADA gold coins will be randomly hidden during this video, and all you have to do is keep in mind those special and misleading moments. Then go ahead to like the video and comment the number of coins you found in the comment section. The winner will be announced on the last Sunday of February. It's going to be fun. Now let's get right to the video. The long-term trend for Cardano has been falling. In late November, the price dropped below $1.91 and, while it's rebounded a little bit to $1.2, other analysts have predicted that it might fall to around $0.9 in the coming weeks. There was some indication of an incoming bounce for Cardano from the $1 area. Would this scenario occur, and can Cardano reverse the downtrend? Each time a crucial support level was broken in the past few months, it has been retested and confirmed as resistance. This happened at the $2.32 level throughout October, the $1.91 level in mid-November, and could now repeat for the $1.2 level over the next few weeks. The delta volume, a cumulative indicator of price and trade volume, has been in an obvious decline, as well as the price. It also shows that there has been little interest at the $1 mark. Sellers have remained successful for a couple of weeks now. The Chaikin money flow climbed toward plus 0.05 as well, and could move above to denote strong capital flow into the market. In the coming days, ADA could see some demand, which could propel the price to $1.26. However, at the time of this video, a move further north was unlikely, as sellers are still strong in the market. Below $1, the next level of support lay at $0.81. How did some investors manage to double their Cardano? Despite the most recent price crash in the cryptocurrency market, larger investors are still buying more of certain assets. There are some Cardano wallets that have more than doubled their holdings in less than 2 weeks. It has become clear to us that the investors are happy with this situation. When the price of a good decreases, this creates an increase in demand. In economics, this is known as the law of demand. The cryptocurrency space went through a decline over the past few weeks, wiping billions of dollars from the total market cap. In 1 week, market capitalization shrank by more than $500 billion. Cardano, which spiked to a 6-week high on January 18 at $1.65, was among the most harmed assets. ADA's price declined by 45% in 4 days from a local peak to $0.92 on January 22. Since then, the token has reclaimed some of its lost ground in trades above $1, but it's still about 25% down on a year-to-date basis. Yet, despite the slump, this hasn't affected investors' demand. In fact, sentiment data reveals that they are buying more. The analytics resource reported that addresses holding between 10,000 and 1 million tokens increased their bags by nearly $55 million worth of ADA in less than 2 weeks. When you look at this rise in percentage numbers, it's clear that the share price of the company has risen more than 110% in 11 days. It's worth noting that Into the Block data showed something similar for BTC as well. As reported yesterday, whales and long-term holders continued accumulating during the price crash, in which Bitcoin dropped by $10,000 in days. There seems to be a lot of demand for the native token, but the network behind it has been experiencing a few issues lately. Reports started to emerge last week that numerous transactions failed due to congestion on the blockchain following the launch of the first Cardano-based DApp, SundaeSwap. With other applications starting to run on the blockchain, the congestion only increased in the following days. In fact, the blockchain load on Cardano began to surge in the middle of January and peaked on the 21st at 94.1%. It has remained above 90% for nearly 2 weeks now. Cardano increased its block size by 12.5% 2 months ago, but this doesn't seem to have the necessary effect. As such, the team aims to introduce a Layer 2 scaling solution during the next Hydra update later on this year. Is Cardano under attack? Some influential individuals are working hard to get harmful bills about cryptocurrency passed through the Senate, making them law. This makes it harder for the industry to function correctly, and all of this could happen very quickly. The latest effort is through a proposed so-called America Competes Act. The underwhelming features of the proposed bill empower the U.S. Treasury Secretary to stop or bar any transaction involving a domestic account, person, or a foreign institution whenever they deem that there are concerns with the said transaction. The Secretary can do so without any obligation to notify the public or ask for comments from the public. He or she can also do so without adhering to any duration obligation and without any oversight by any financial regulatory body. Founder of Cardano blockchain and IOC CEOs, Charles Hoskinson was infuriated with the bill because it gives one person unilateral authority to ban, stop, or limit any cryptocurrency-related transaction. This threatens the entire industry. In brief, it would earn the Secretary unchecked discretion to forbid financial institutions, including cryptocurrency exchanges, from offering their customers access to cryptocurrency networks in case it basically says, give the USA power to say, hey, there is something here we are concerned about, and he can temporarily ban it for up to 120 days, and at that point, he needs a public hearing to a public inquiry to go through the process of formalizing that concern. He is alleging that these are moves by mainstream financial institutions to destroy the progress made by crypto and blockchain innovations. Every single one of these legislations is an attempt by those who would dominate and control us to drag us back down to a system where they have all the power and we have no say, and they print enough money every year to deflate the money in your pocket by 20%. How do you save? You see the Great Reset agenda. They say you will own nothing and be happy. This is how you get there, bill by bill by bill. Hoskinson said that the harmful provisions were re-sneaked into the America Competes Act by Congressman Jim Himes, even though they were removed from the National Defense Authorization Act a year ago with a lot of awareness about how harmful they are. That people never wanted to hand over power to only one non-elected bureaucrat to unilaterally ban financial transactions and accounts at will and without any public hearing or SEC oversight. Himes had introduced it as an amendment to the Defense Authorization Bill last year. Hoskinson said that a bill trying to destroy a $2 trillion industry would be irresponsible, not even considering it's harming America's ability to compete with China. We have this industry for as long as we fight this industry. If you are an Ethereum fan listening, a Solana fan listening, NFT fan listening, a Bitcoin fan listening, all of you are impacted by this. At one point, do you stand up and say, we have heard enough, don't do this? Every politician who votes for this, primary them. This is not a joke, it is not a drill, it is not a test, it is an industry that is liberating mankind from where it is at to a better state of affairs. He called on everyone who supports cryptocurrency and blockchain platforms to oppose the bill and the act vehemently. Share news about the proposed bill, call up and write to their congressmen asking them to vote it out, and campaign against those who vote to pass such bills. A group of lawyers who have been openly in support of cryptocurrency recently vowed to fight this bill. Senator Cynthia Lummis and Pat Toomey, both avid supporters for crypto in the past, are also expected to fight hard against it once again. Less than 2 months after the passage of the infrastructure bill, a new bill has been proposed which has led to a second boom in interest from crypto exchanges as they fear being penalized with high tax rates. Users are required to file a tax report to the IRS detailing crypto sources, for example names of senders, senders' social security numbers, and other data. This is to be done for all cryptocurrency transactions worth $10,000 and more. Exchanges and other crypto-related business services are now required to report the identities of their customers. This will make it easier for agencies to monitor these individuals. What are your thoughts on this? Tell me in the comment section. If you guys like this video, then be sure to give this video a like. Also, if you don't want to miss out on any new future videos, then be sure to click on the subscribe button and turn on the notification under this video. And don't forget about our giveaway. How many coins did you find? Drop your answer in the comment section and you could become a proud owner of a brand new MacBook Pro. And remember, the information provided is not trading advice. We strongly recommend independent research and/or consultation with a qualified professional before making any investment decisions. Thank you for watching and stay strong.